Hello everyone and welcome to Investing Angles, to our Market Waves Daily. Today we are going to discuss quite a few things. First of all, we'll start with volatility, then we'll move to our major US indices and we'll discuss S&P 500, Dow Jones, Nasdaq and Russell from the candles point perspective, and after that we will discuss S&P 500 sectors and major stocks, major contributors to the Dow Jones, S&P 500 and Nasdaq. After that we will talk about Elliott Wave's perspective from this tool and what S&P 500 and Nasdaq are looking for. Then we will wrap on indices and move into commodities. We'll quickly discuss oil and natural gas. We'll see where they are going. And in the end, we will talk about bonds, in particular yields on 10-year yields and TLT. All right, so let's get started. Before we begin, please make sure to subscribe to our channel. This is the volatility map, and what I'd like to say that on Friday volatility formed a very strong bullish engulfing, and in our weekly review we said that this is gonna be a move up. The only thing that we couldn't forecast that much move up, but anyway, this is what happened, and we are seeing the candle, the red candle. Ideally, now we should see a reversal. However, this is the tricky point here, that while one-day candles are kind of bearish and expect a pullback here, the two-day ones are formed another bullish engulfing, and this is a stronger one that we had on Friday, and this is a biggest concern because right now the next 2 days are expected to be with higher volatility. We don't know when exactly would it start, but the next 2 days we should expect something higher. Well, that's the perspective of volatility. Let's move on to the major indices. This is the closure of S&P 500, Nasdaq, Dow Jones and Russell, and what we are seeing here on the daily frame, everything looks good. So everything is like bullish, and the chances for a bottoming candle here are fairly significant. Again, however, if we look at the 3-day formation, for example, this is for IWM, we are seeing a very strong bearish engulfing, and somewhat similar for Dow Jones. DIA formed a bearish Harami candle, which is not as strong as bearish engulfing for IWM, but nevertheless it's bearish. And the same thing is for Nasdaq, which is a dark cloud cover, although it's not very strong. But for S&P 500, it's indeed a dark cloud cover, and it's a big one. So what they're telling us that there is a good chance that the next 3 days for these indices would be bearish, although 1 or 2 days could be bullish. So that's a tricky part here. And now let's move on and have a look at the futures. So the futures had a 2-day closure today, and this is entirely bearish for S&P. This is again bearish for Nasdaq, and the same for Dow Jones, and there is no difference for Russell. That's a very concerning thing, because now we have bearish candles on 2-day frame, 3-day frame. The only thing we have bullish is a 1-day frame. If now bull needs to build a momentum, if this momentum is significant to overcome the 2- and 3-day bearish odds, then we will see a move up. However, the next few days will be critically important for that. Now let's move on and see what Elliott Waves are telling us. So I have 2 counts here. One is for bulls and one is for bears. Let's start with bulls. This is the goods. This is the best case scenario. This is a happy path. What we are seeing here, potentially that corrective wave that started in the middle of January, it could be ended here, and with as an ABC, potentially zigzag, and now if the index or futures are able to form an impulsive wave here, well, then we are safe, and that's a good chance that the rally will restart and move towards higher highs. And the wave is still developing, the very first wave, and we are not seeing 1, 2, 3, 4, 5 yet. Once we see it, and that would be a good, very good sign. And particularly if in these particular conditions, if S&P 500 moves above this red line, makes a new all-time high, this would be a very strong move, very invalidation technically for a bearish count. And now let's have a look at the potential bearish count. This is what is possible, also what is possible. We are seeing quite a strong impulse of the top and the big bearish flag zigzag that we discussed over the weekend. Potentially this was wave 2. We have an impulse here, potentially. Again, this is potentially because there's a big gap here, and we would never know what kind of wave was developed here, indeed. Now, assuming this is a corrective wave, and this could be wave 2 over smaller degree, then this wave could develop into something like this. Well, this would be really the worst case scenario. All right, so let's move on to the bigger chart. So that's the perspective path for the happy path. So let's say we have an impulse up, wave A, B, C, completed wave 2 here, and if it moves in impulsive fashion here, then we would see 1, 2, 3, 4, 5, something for wave 3, and wave 3 would be ending between 63 and 66K, which is, no, pardon, 6600 and 6300, not 66K. Well, that's the perspective. Now let's have a look at what is happening with the major sectors. We can see that all sectors today formed green candles, so all of them, and it means that they are, some of them are sitting on very solid support levels. So there is a good chance that this was a bottom. Today was a bottom, and we might see a move higher. However, these, from the candles perspective, these moves need to be confirmed. And tomorrow is a critical day for confirmation of these moves. If we have a green candle at a new high, then most likely it will be a reversal. The tricky part is technology XLK, because it needs much higher move, and in order to form a bottom here, which is not going to be easy. And well, that's technically it for the only thing that energy is looking quite bearish. Every other one is more likely bullish. And another point of data is Dow Jones Transportation Average Index, which formed today a very strong bearish candle on the daily frame. And if we look at the 3-day frame, it also formed a very strong bearish candle. And if this is technically a tower top, and if this one continues down, well, I highly doubt that Dow Jones is going to go into the opposite direction. Well, that's the transportation. Now let's have a look at the biggest stocks. What we are seeing here is that Amazon is doing really well, and Meta is also on track for higher highs. NVDA was trying to establish a bottom here. This candle could be a Morningstar doji. However, if we look at the 3-day frame, it's not as healthy as it could be. So that's potentially this is potentially a very strong message for the market. So the NVDA might be going down and might be going down much lower. And the same if we look at the Microsoft, for example, this the candle here, it could be bearish and bullish. The 3-day frame tells us a bigger story, a different story. So Nasdaq or Microsoft lost 300 days moving average here, and now it looks like it is going to explore lower lows. We'll see how it moves in the next couple of days. So far, the odds are bearish here. And the similar situation for Apple. Technically, Apple confirmed a reversal for this little bounce. And what we are seeing here on a 3-day frame, the candle is also bearish and a fairly strong one. And an interesting Tesla, the same thing here. So if what we need to look is the 3-day frame, this is a bearish move, a strong bearish move, bearish engulfing. And if you look at the 3 last candles, they closed below the strong resistance line. So far, it is kind of hanging, but the chances for a move lower are significant. And now let's have a look at Nasdaq potential moves here. So this is the wave that we discussed in our weekly report. So potentially Nasdaq, after the first impulse down, it made a similar move that S&P 500 did, forming possibly wave 2. And again, this could be an impulse, the first impulse down with a big gap. So far, the wave up doesn't look exceptionally impulsive. The first wave of the bottom was a diagonal, and if it is a diagonal, it could be a corrective wave as well. So the wave 2, obviously, and wave 3 potentially needs to be an impulse. So far, we are not seeing a clear impulse here. The chances are like 50-50, and the question is how Nasdaq is going to test this level here. If it breaks above this level, then most likely it's going to be another higher high. Well, that's Nasdaq. Now let's move on to our commodities. So what we are seeing here is oil. As we discussed in our weekly report, oil have been bearish on larger frames, and it was trying to establish at least a short-term bottom. However, it wasn't very aggressive, and now we're seeing why. So technically, today on a 1-day, 2-day, 3-day frames, and on these 3, oil closed with a strong bearish candle. If we look at the 8-day frame, which also closed today, it's almost at our top, but nevertheless, it's a strong bearish move. Now let's have a look at our chart for oil, which we've been tracking since when? Since December 30, when we called a potential move up here into the rectangle C, and the move down following the move down. So for those who followed us on this call, they should made about 11% up, and those who listened that was a top, now they should made about 9% down. Well, that were 2 side-by-side impressive calls by investing angles, and right now what we are seeing here is a potential impulse being formed. The critical level to watch is 70.955, which it is, if it's crossed, then all possible impulses of higher degree upward will be cancelled or negated. All right, so that's a perspective for oil. Now let's have a look at natural gas. What we called in our weekly report, we said that this was a perfect matching low formation, and it has all chances to reverse here. The same was the weekly candle, which was sitting ideally on on a very strong support line. So what happened today? We see a huge spike in natural gas prices, and the chances of a reversal are increasing. Now at the 2-day frame, natural gas also formed a huge bullish candle. And another important event here that happened today, it was a golden cross, 50 over 100 weeks moving average. This is significant, and most likely it will lead the gas upward. If you wanted to have a look at the charts and the potential targets for the next moves, you're welcome to our website, investingangles.com, where we cover natural gas on our daily analysis and the weekly reports with charts, targets, and everything. Well, we also support lots of stocks, crypto, treasuries, currencies, major US indices, and a couple of global ones. As well, we have a live trade account which provides swing trades for S&P 500, and a Discord room, obviously. All right, so and right now we are offering a free reader account, which will allow you to receive our reports, and those which are without paywall, you would be able to read them and evaluate our service. Okay, so don't forget to subscribe to our channel. And now let's move on to our final part of this discussion, bonds. So this is okay. So this is a bit of off topic. This is Canada 5-year government bonds, and this is the candle what we have today. And what candle is telling us? Well, that's probably a reversal, because this is huge. And I'm wondering what happened today in the Bank of Canada. Have they finally decided to lift the dollar? And so the next meeting will be a rate hike for 0.5% or so. I don't know, but anyway, that's the candles know everything. So this is potentially a reversal for this type of move. And if we look at the Canadian dollar today, US to Canadian, so Canadian gained a lot of ground. So from 148 exchange ratio, it fell to 144. So Canadian gained 4 cents against the US counterpart. That's amazing move, and it looks like it's been a top. And now the chances for a move lower are significant. Let's see how the week ends, and what are the next moves will be. Now, after this little speculation about the potential moves for Bank of Canada, and as a disclaimer, I'm Canadian. That's why I'm talking about Canadian exchange rate a lot. Now let's see the US government bonds. So what is happening here? And the 10-year yield is an interesting spot here. So today we had at the very beginning of the day, I thought we are going much lower because it was a huge red candle. But unfortunately or unfortunately, this is recovered, and now it's the candle is technically bullish, with the good chances to push the price or to push the rates higher. And if you look at the 2-day frame, which also closed today, it's a strong bullish move. It's an inside up, and it's above the strong resistance, now support line. Okay, the weekly, as discussed in our weekly report, the weekly candle wasn't very strong, and there is a chance that it's going to be overcome with the next one. And getting back to our monthly track, this is the monthly candle closure in January was not really bearish, but it wasn't bullish either, so it was kind of neutral, and the next candle will be decisive. Okay, now let's have a look at TLT. TLT, unfortunately, this is bearish formation. We were talking about a lot about this support, this resistance line, 50 days moving average, and this particular bearish cross. This is 100 over 200 days moving average. Some people call it death cross. Now the chances, we have build-up of 4 bearish candles here. The chances of a final reversal are fairly high. And if we look at the 3-day frame, the same thing is probably going to happen. So we have another bearish candle formed. And the final chart that we are looking for today is our TLT projection. So with the latest move, I think that TLT broke the impulsive structure of the potential wave up, and now we are treating it as an A or either wave C of, and this would be the entire formation, or let me put it this way. So this is potentially wave C. Just to do some clarity, and this would be the move next wave here. Well, that's technically this could be a bearish flag, and this blue rectangle would be a target for this bearish move, for the next bearish move. However, I cannot reject, because the move down was impulsive and it was quite lengthy. It took a couple of months to complete. Perhaps we might see a bigger corrective action here, like an ABC in red. After that, we will probably get another wave down, but the targets would be somewhat similar, I would say. Okay, so that's been all for today. We discussed a lot, indices, volatility, oil, gas, TOT, and sectors. So if you like it, just say so. Support our channel with your likes and subscriptions. Check our website, Investing Angles, for a free reader subscription, and enjoy the rest of your day. Have a good day and happy trading, everyone.